Okay, let's see if this thing is firing correctly. What's up, guys? As you guys see this, make sure you say what's up. Just go into that comment box right below. And there we go. Click this off. Post everywhere. All right, cool. As you guys roll in, make sure you say what's up. Just post right in that chat box. Below here to the left, say what's up, guys. Let me know where you're coming from, what's going on in your neck of the woods, how you're feeling after this fun little run we're having to the downside. Always a fun thing to wake up to go to sleep to, and to wake up to. For anybody who's in the United States, you're kind of in these time zones. Very excited though. Stoked to be here. Stoked to have you guys here. So as you guys roll in, a couple things. Say what's up. Want to be able to see everyone, just write in, hey, what's up? I'm coming from wherever. If you're not subscribed to the channel, make sure you hit the subscribe button and hit the thumbs up button. Get that algorithm going. We're almost at 100,000, so we got to get there. And share this with anybody. Like, share it on social media or whatever. Before or after the live stream. Today, what we're talking about is the obvious what's going on. So we got Bitcoin hitting this 62%, the 61.8 retracement. I'm going to talk a little bit about the long-term retracement. Spent a lot of time last night looking at the Bitstamp charts versus GDAX, because GDAX only goes back to 2015, and Bitstamp goes back a little bit further, so it gives you a little bit better of a look. So I want to look at that. We're going to look at the order books a little bit on GDAX, which typically is GDAX and Bitfinex typically have the best price action. There's usually the most accurate orders coming in through those to be able to signal reversals, which is really what you guys care about, right? It's like, is this really the bottom? That's what we're going to look into. Look at the market in general, a couple of insights I'm seeing. I want to show you some cool things not cool, I shouldn't say that. What's going on in the greater market? This has been a trend that we've been talking about last week or two about the macro world, right? The macro market, the equities, the global derivatives, everything, how that's going to play into what's going on in crypto. A little bit about the news, and then I want to take some time to answer questions, say what's up, all that. So again, if you're just getting in here, welcome. Say what's up in the chat box, hit that subscribe button, hit the thumbs up button, and let's get into it. Let's get talking about what's happening on the chart. So the big question, or yesterday, I should say, a little bit about the last 2 days, we were talking about two major levels. The first level is the one we touched, and the other level is when we're going to get down to 4,900, which I'm going to just draw it in so you guys can see a little bit more visually where that is, right? And the one that we hit on this retracement line is almost dead set. And now the reason why we're looking at Bitstamp, I'm going to go to the daily so you can see it a little bit better. I'm on the log scale. I'm just looking over here because on this monitor I can see what I'm doing. On the log scale, you can see that this is really the beginning of this massive bull run, right? You could potentially make a case for this one, but I'm using this for this particular retracement line. And previously, I was drawing it from this retracement line, and I realized that it's probably so I drew them from all different areas. I did a lot of research on historical markets. This is the one that I think is going to be accurate, at least for where we are now. If we switch off the log scale, you can see that retracement actually does make some sense from a price standpoint. When you look on log, it looks like it's not nearly big enough. So I think that's the other big piece. And then we're looking at this support line. So when you zoom in, assuming that's the trend that we're on, a more of a long-term, really bull run trend. The good news is or the bad news is this, right? I mean, the bad news is that it's going to be very painful to experience this. The good news is if we're looking at a long-term run, the next leg is even more exponential than that. That's when you look into like 30, 40, 50,000 as the next legs up in order to hit these extension levels. So overall, I mean, as weird as it is to say, it's kind of good news. It's definitely healthy for the market to go through this. Now, the big question is whether or not we're going to go down to this $5,000 level or not. Now, obviously, standard disclaimer, this is not advice. I'm not a pro. This is just my opinion, whatever. Here's what I think. I think that we touched on this. I think we got some pretty good volume on this. But one thing I have learned, I've been in crypto for 4.5 years now. I've been trading for about a year and a half, or investing heavily for a year and a half and trading for about 9-10 months, right? And the one thing that I have learned, not on top of like the idea of patience really equals more money, is that you got to wait for confirmations. You have to wait for the charts to close out, for these candles to close out before you make any decisions on whether or not the trend is intact. The worst thing you can do, for me, and this is just what happened, is trying to time these dips and trying to nail that absolute bottom. I've done it before, and it feels great. It's like, it makes you feel like you're the total boss of the world, but it's not a really good strategy, to be perfectly honest. It's a pretty high risk situation. And so what I'm looking for is a confirmation. One, I want to see how this daily candle closes on all the charts, not only on Bitstamp, but on Coinbase especially, which is GDAX's charts, Bitfinex, Gemini, all of them. This other piece of this, which is, in my opinion, just as important, is this level of right around, let's say, 9,800, give or take, right? And this, to me, on the chart, this is the 50% retracement. What happens, for anybody who's not familiar with this stuff, previous support levels, once you break through them, they become resistance levels again. So now that this price has dropped below this 50% retracement level, it's got to make its way back through it. It's got to break through that line, that resistance level, and then it's going to do the same thing all the way through. And you're going to see that all the way back up. You're going to see these resistance levels, and then you're going to see psychological levels, which typically tend to be round numbers for whatever reason. But these resistance levels tend to be stronger than the psychological ones for the most part, unless you're looking at huge milestones, things like 20,000. 10,000 is kind of the same thing. That being said, if we cannot break through this 9,800 level on the way back up, we're going to come back down, and then we may test it again. The other piece of this is that it may just come down and it may test this 90 or 7,500 level again with more force. So you can see how this thing is just a wick. That means that there was only the sell orders that actually touched that level. The volume of those sell orders was not nearly as big as the overall volume of the candle itself. So it probably cleared out a ton of stop losses that were waiting for that 7,500, right? It triggers all these, and so they auto fire all the way down. That's really where the pro traders come in, and they clean up the quick profits because they know it's going to bounce. So we're going to have to see if this holds. This is why I want to wait for this. I mean, you can switch over to the 4-hour. I'm going to wait for these candles to start to work themselves out because you got a huge bullish engulfing, but now we're starting to see something else play out here. So if it keeps coming down here, we're going to see if it can make its way through that. If this resistance level can hold again, and if it holds again and it comes back up, that's a good sign. If it can't hold, well, then we're looking back more at this 5,000. If it goes down to 4,900 level, or even 43 for this really big retracement level, that, in my opinion, I would be very, very, very surprised if it went even further below that for a sustained period of time, short of some external factor, right? I mean, some major regulatory thing could come out, like, hey, crypto is illegal or something, and that could drive the whole market way down to like 1,000. But based purely on market dynamics, I don't know how it could go much lower than this based on the ongoing demand of this chart. All right, so that's what I'm seeing. Again, the biggest takeaway, at least for me, just wait and see what happens with these candles. The longer the time frame, the stronger the conclusions you can make when you're looking at a chart. So if you're looking at 4 hours, you're starting to make a conclusion, wait until the 1 day. So that's what I'm going to do. you know, I've learned my lesson on trying to time things. It's much better to wait for it to prove that it's coming back and then buy in early as opposed to trying to nail it right the first time. All right. So we're going to keep that on our radar as always. The other thing that you can watch, which is something that I watch a lot, if you're looking at if you want to get a sense of what's going on, is you can really get a good sense of the speed and the types of orders that are getting laid down when you start to look at these order books. If you're not familiar with this, I think this is just good practice, right? You can look at whatever time frame you want. You can see a lot of the volume, but you can see how the orders get stopped out, and you can see the speed at which they move. Sometimes it's hard to see that on something like TradingView. You can also see the depth chart, right? At least before I looked, there was a huge sell on Litecoin, but it went away. And this is the other thing to keep in mind. You guys look over here, like Bitcoin is down 1.77 right now, but Ethereum is down almost 12%. Litecoin is down 7.6%. And so usually Bitcoin moves first and then these trail. I mean, sometimes it can be a matter of minutes. Sometimes it can be 15, 20 minutes. Sometimes it can be a couple hours. But usually that's a good way to see what sort of trends are coming, which sort of trailing. If you want to get cute about it, you can try to do an arbitrage on that. But for the most part, Bitcoin tends to lead the way. But I don't know if we have the juice to keep it going. And it's not worth anyone's time to extrapolate on that. It's much better to, let the charts do the work. All right, cool. So let me see here. Cool. All right. So we go over to CoinMarketCap, kind of the same deal. You can see kind of across the board here. You're seeing these things pop up. This is not accurate. Very solid. What do you call it? Analysis. These charts are pretty crude. But what I would do is I would always switch to Bitcoin. At least this is what I do, because this is how you get the deals if you already own Bitcoin. If you already own fiat, that's one thing. But I think a lot of people, when you're buying altcoins, you already own Bitcoin, and you're like, oh man, I want to diversify and buy some really cheap alts. You can do that. Just make sure you're buying cheap alts against Bitcoin that already exist. The other really interesting thing that I saw when you look over at Binance, especially, which is the top volume exchange today, BNB is one of the highest price. Its price has gone up the most. Now, if you don't know, BNB is an exchange token. I love exchange tokens. I think it's a great business model. But it tends to run really hard whenever there's a lot of volume going through Binance. And you could go through and you could see the volume as best you could on CoinMarketCap. But in real time, you can see the token being traded. You can see the price of this token because it's what's used for trading fees. That means that there's a large surge in altcoin purchasing. From what I can tell, that's my analysis. So there's a very good amount of people, a very strong indication that a lot of people not only think that this was the bounce or a bounce, but they actually took action on it and they're buying altcoins based on that information. Now that could go either way, but that's a good data point to take from this to be able to understand where the money is flowing. I think that's really what you always want to be looking at on days like today so that you can make better decisions. All right. Kind of in related / unrelated news. I'm looking at the Dow Jones Industrial Average. I don't know how many of you guys look at equities or look at the major markets, but I would encourage you always to keep these in mind. And you're looking at the one-day charts. This is, the industrial average of, I don't know how many companies are in the Dow Jones Industrial Average. Same thing with the NASDAQ, Russell 2000, S&P 500. They all kind of look the same, but you can see that's a pretty clear top. I shouldn't say clear top. It's just a top, and based on what's going on right now, and so look at this daily candle. This is this is pretty big. I think that might be one of the biggest daily candles we've seen in a long time. If the equities markets, if the main proxy of the economy, which is kind of what this is, loosely speaking, if this starts to go down, how it affects not only Bitcoin, but how it affects this, right? The relationship that we start to see between that and the total market cap of crypto, this is a really important number that we just have not been able to test because this thing's been in a bull run for the last 7 years for the most part, right? And so for the stock market, you have things like gold that you can benchmark it against. You got the VIX, which you can benchmark it against. You've got other indices. You got tons of indicators, Federal Reserve, all that sort of stuff. But we don't have anything that we can benchmark against this. Meaning this, if this continues, if the equities markets, if the stock market does go down, I have no idea if it will, but if it does, will that help or hurt crypto? And the jury is still out on that because nobody knows yet. So I would encourage everybody to keep that in mind. Start checking this sort of stuff. If you're on TradingView, you can look at DJI. You can just go to Google Finance. You can start watching this stuff. But you gotta keep this front of mind, because this sort of stuff is what's really going to drive the juice, or drive suck it away from crypto as this market starts to get its momentum back. I think that this is going to be one of the big stories of 2019, maybe 2018, but I think the market's still got a pretty good amount of juice in it. But this is going to be a really big story, and it's going to be really important as you allocate your funds. If you diversify across multiple asset classes, which I would encourage anyone to do, this is the kind of stuff that can make sure if there is a down cycle on any of your assets, you have certain assets that are not having a down cycle. That's super important for long-term wealth, right? All right, cool. All right, we'll do like a couple pieces of news, but we'll also start getting some questions. If you guys have a few questions, anything that I can help answer, please post it in the chat box. Make sure you like the video before you post a question. That's like a little bonus for everyone. If you just write thoughts on whatever coin, you're probably not going to get answered. I don't think it helps anyone. So please, the better the question, the more I'll try to answer it. So just type something right in that chat box, hit the like button on the video, and we will get rolling. So let's see what questions I can ask or answer for you. Let's see here. All right. Well, I think there's probably some sort of lag, so I'll let this thing pick up. Nero asks about tax strategies. That's a really good question. That's actually something that I meant to bring up. So first of all, definitely not advice, whatever. You got to talk to an accountant or a CPA or somebody. But what I will say is this. The number one thing you can do for taxes, no matter where you live in the world, is you got to start tracking everything you do. Okay, you can use a spreadsheet. I use a service. If you go to coinmastery.com/tracking, that can give you a discount code. It's a free service up to like 100 trades or something. If you want to use APIs, you got to get the paid, but it's cointracking.info. Track everything you're doing. That's number one. If you haven't done that already, go do that. Number two, what's going to happen? So at least in the United States is right now it's February 1st. A lot of people are going to wake up at the end of March and they're going to be like, oh yeah, I got to pay taxes on my crypto or whatever. And they're going to realize it's way more than they think it was, if you want to do it the right way. And I would encourage everybody to go talk to a professional about this, make your own decisions, be smart about it. But you want to start allocating funds as soon as you can. So if you're out there, if you're making money, if you have a job, if you're an entrepreneur, if you're doing something and you're making money and you're like, I'm making so much money because I'm going to buy this dip. That's good. I mean, I hear you, but realize that making sure you have cash reserves available to pay your taxes when you need to pay your taxes, that is going to help you, because at the end of the day, this channel, this is all about how do you make better decisions, because better decisions are what make you big money. If you don't have the cash available, you're going to be very stressed. It's going to be really difficult to make good decisions. So I'd encourage everybody, treat it like a savings account or something. First of all, you got to figure out what kind of ballpark you're looking at, have your accountant give you an exact number. But secondly, you got to make sure you have the cash available. It's tempting to just throw it into this and be like, oh, well, I'll arbitrage it because I'll buy it now, and by the time I pay my taxes, I'll just scalp the profits. It's very hard to win when you're playing like that. Okay, so I think that's the other piece. The third piece, which is when you get into strategies, I would encourage everybody, because I can't really talk about what to do. This is when it gets really gray area. But I would encourage anybody to look into strategies like tax harvesting and tax, selling at a loss, which many people are like, oh, you don't lose money until you sell at a loss, and whatever. That's ridiculous. But one thing that's interesting is that you're going to start to see when you look at your portfolio that something may be down on US terms, but it's actually not down very much on Bitcoin terms. So if your true goal is to accumulate Bitcoin, theoretically, there is an arbitrage to be had if you can sell it when it's up on Bitcoin terms and down on USD terms, which tend to happen in moments like this, right? When you see a big drop in price, meaning you're actually scalping into more Bitcoin, but you're taking a loss on the USD side, which is what's taxed. So there's ways to do that way. And again, I can't get into the specifics on that. If you're interested in that sort of stuff, start to look up tax harvesting, start to look up, selling at a loss and how you're going to balance out your end of your portfolio. But there's always a strategy. You just got to have one. You got to make a plan. You got to do something about it. So I hope that helps. Okay. Daniel, let's see. Have you managed to think clearly and stop stressing about the capital that you have lost? Yeah, because I don't have the capital I have in there. It's not, my life savings is not in crypto. Even though I'm as bullish as you could possibly be. I'm the bullish of all bull. I mean, it's sort of like, this is what I do, right? I love this stuff. But I know that I could be completely wrong. There's a 3% chance maybe it's more than that this could all go away, that everything could go to zero. And if that happened, yeah, it would suck. And it would be very hard psychologically, but financially, it's like, I knew that that's what this is. This is a completely speculative market. And while it can give you huge bounties of money, you cannot be playing with money that you need. That's just a complete lotto ticket. So I don't really get stressed in times like this, because I know that it's, that's just what I'm looking at. All right, let's see here. Carter, you used to do something like once a week dollar cost averaging, then you switched over to daily, even hourly dollar cost averaging. Any statistics to prove that daily dollar cost averaging is more effective? This question from Mike. Great question, Mike. Dollar cost averaging is just a way of diversifying, and the more you are in a parabolic bull run, like, in other words, the steeper the curve of the growth cycle that you're in, the shorter you want that dollar cost average timeline to be. Similarly, the steeper the down cycle, the shorter you want it to be, because markets don't spend their time on a steep slope for very long. They tend to want to be on like a 45-degree angle, or maybe even a 30-degree angle on average. And so if you're dollar cost averaging over like 5 years, there's a set, allocation for that. But during something that is, was parabolic, every sign showed a parabolic, the growth, everything was about it. It was like a way to do one step of risk below just going all in with the cash, is to shorten that dollar cost averaging cycle. So it's really just about de-risking yourself as much as you can. and knowing, and then having a reserve set up for the dips, right? That's always been my plan. Dollar cost average, buy the dips. Maybe trade here and there, do some ICOs, but really that's the big move, and find really great coins and just do that and play the long game. Okay, let's see here. Mike asks, what are your thoughts on big exchanges like Bittrex and Binance not dropping support for Tether? Wouldn't they want to distance from this mess versus dealing with the potential fallout? Great question, Mike. I think it's really important to understand a few of the ramifications, especially as somebody who, I've built probably hundreds of websites in my life, owned businesses that get pretty good amount of traffic. The size of the businesses of things like Bittrex and Binance and even KuCoin at this level, but GDAX or Coinbase or Gemini, all of these businesses, Bitfinex, they're a little bit, whatever. They're so big, and there's such massive ramifications to drop Tether. It's not just like, hey, we don't like this, let's just turn it off, right? Because you're going to get literally 1 million support tickets that come in. You're going to spread huge fear in the market. There's going to be massive back-end server problems. There's going to be huge financial implications, and you're probably going to lose a huge amount of market share if you don't support Tether. Because even though a lot of people do have fear about the Tether thing, a lot of people still use it. It's still the market cap is massive. The velocity of money in Tether is still massive. So people are still using enormous amounts of it. And it's the kind of thing where it's just such a huge thing that you got to realize the people who run these companies, when they are companies, they're, especially in the United States, these are regulated exchanges. They're going to be regulated exchanges. They are seriously compliant or trying to be compliant. They probably know way more than we do about what's going on. And what they're doing is just trying to make sure they do it in the right way so that it doesn't become a self-fulfilling prophecy. It doesn't tank the market. More importantly, they need a replacement. So that's why you see, guys like Richie, who one of the founders and operators of Bittrex, coming out and talking about getting fiat into Bittrex. Because it's one thing to just drop Tether, but if you drop it without a replacement, that's a huge problem. So they need something in replacement. The best alternative is just get traditional US dollars. The problem is that there's massive regulatory compliance and bureaucracy that you need to do to get that. So that's why I think it's not happening. That's my opinion. Stevens from Boston, what's up? Market cap predictions for the end of 2018. Heck of a lot bigger than this. I'll tell you that much. All right, let's see here. What's my take on credit cards charging cash advance fees to purchase coins on Coinbase? I think it's bullshit, right? Like, who wouldn't think it's bullshit? It's ridiculous. I think that there's a million factors going on here. One, it's a profitable endeavor to do that. Two, it shows some level of best practices to try to be compliant if they do get audited or brought into facilitating cryptocurrency as a security, right? So they got to show that they are trying to mitigate that risk on some level or thwart the flow of currency. But I think bottom line is that why they do not want you buying crypto. Why would they? It's a direct threat to their trillion-dollar companies, business, industry. And so I think it's complete BS. And I think that you're just going to see more and more of this where they try to separate the fiat world, the banking world, the credit world, debt world from the cryptocurrency world. And short term, it's going to work. And long term, it's going to be the exact thing that sinks their industry. So I know it sucks right now, but I think that I love seeing stuff like that because I'm just like, man, you guys are digging your own grave and you don't even realize it. You know, they don't adapt. They're terrified. And just gets me, it just fuels my fire, gets me more excited to make videos like this, to make this community bigger, spread the word, and get more people using this stuff, personally. All right, let's see here. Jope, hi from Curacao. Thanks for liking the video. Want to know your vision. Do you think that crypto will be used for things like buying groceries in 5 to 10 years or something? Maybe. I think currency, I think day-to-day transactions is one use case of currency or crypto that's mildly interesting to me. I think that it could definitely be the thing, but I think the bigger vision of crypto, in my opinion, is just how wealth is measured. Right? Like right now, we measure wealth in a very different way. If you're interested in this, like 2 or 3 days ago, I did, in the title, there's a video called Valuing Based on Network Capitalism. That's what I think the vision of all this is. I think the term cryptocurrency is very acute. It does not nearly paint the picture of what I believe this is going to be, because what it does is it changes the value of things. And the reason we can do that is because we can change, we have a mechanism of exchange, meaning we can replace money. A very very loose example, or I should say crude example, it was a good word, is the way 20 years ago, people did not value information. They did not value communities. They would look at something like Twitter or Facebook, and it would be based purely on the earnings reports. But in 20 years, things like the engagement level numbers get built into PE ratios. So that's one example of valuations and wealth changing hands, right? Things like Mark Zuckerberg can be worth a certain amount of money. One, because there's a company, but two, because it controls so many people and information and engagements. I think that the vision of crypto in 10 years, it's less about like the use cases, and it's more about the networks that it's going to build and the way that it can create wealth in new ways, where it completely removes the need for a trusted third party to moderate all that. And that the people who own the tokens within the market to drive the price, to create the demand for the token's utility, whether it be for groceries, whether it be for storing your wealth, whether it be for privacy, whether it be for identity, whatever the use case is, that to me is the exciting part of the vision. And that's the kind of thing that, you tell people this who aren't in crypto, and they look at you like, dude, you're talking, this is blah, blah, blah. You know what you're doing. And you got to make money. When are they making profits? And that's what's exciting to me, is that this is such a big idea that it's going to take a long time, but it's going to be so much bigger than people think it's going to be. That's why it's so wild. It's the same thing that happened. If you go and you read history books, I would encourage everybody to read history books, especially about the Industrial Revolution and how that changed, right? Like what JP Morgan did for the financial world is kind of what's happening now. If you guys don't know, JP Morgan essentially created stocks. He created the idea of equities, where you could have a company and then you could split it into, let's say, 1,000 shares, and then you could sell those shares and put them on a market. And those share prices are based on the earnings of the company. He did that. He built that entire system because of guys like Andrew Carnegie and John Rockefeller and Cornelius Vanderbilt and all these guys. He just built that, and all this wealth moved, right? It moved from these archaic systems into this capitalist fractional reserve system. Now we're seeing the next huge wealth revolution. And it's happening faster than people think. It's happening in a way that looks like a get-rich-quick thing. But in 10 years, mark my words, there's going to be the world is going to look really different based on how people measure what wealth is, how companies are measured, how utility is measured, how value is measured. That's what gets me excited. All right. Let's see here. All Are the Olympic Winter Games in South Korea a potential catalyst for crypto? I don't think so. Unless Dash starts running commercials on it. But I don't think they're going to. So, yeah, I don't know. I mean, could be, but in my opinion, I don't think so. All right, let's see here. The Crypto Yogi. 1 million people waiting to use the Robinhood app for crypto starting February 15th. The Square app launching. Do you see that as a big boost for the overall market cap? Absolutely. Right? And think about this way. Whenever you're thinking about the value of crypto, and obviously value gets translated into price. That's the metric we use, at least for now. And on the aggregate, market cap is the place that it all rolls into. But when you look at things like Robinhood and the Cash App, what it's really doing is it's creating a stronger network. One, because it's adding more people into the network, specifically into Bitcoin, maybe into Ethereum or whatever coins that they add. I know Robinhood's adding like 10 coins. So it's going to strengthen those networks, which is going to make the market itself stronger, which that can help the market cap. But more importantly is people have to use the stuff. Now they can use it based on speculation. I mean, that's what's driving a lot of the price right now. That's like a kind of a use case in many ways. But the more that people can, so we need a lot of people like this. But the second piece of it is the demand curve needs to go up. People need to not only want to buy Bitcoin because it's going to make them more money, they got to buy Bitcoin because it has utility in some way. So that when the price goes down, people still want to buy it because it's going to provide some level of utility to them. So think about something like gasoline. If the price goes up or the price goes down, it's not like you're like, oh, well, I'm not going to buy gas anymore. I don't care. Like it's too expensive. I'm done. I mean, maybe if you have a budget or whatever, but you need it to drive your car. You have to have it. And that's why that there's a market for it. I mean, that's kind of a whacked out market, but you get the picture, right? Like you need that commodity. So that demand curve is pretty strong. And that's why the price will fluctuate, but everybody will still use it. And the more people that are there, the better it is for the overall market. So that's what we're looking at with crypto is, yes, we need more people in here, but right now more people just means more speculators, which means you're going to get more of these huge bull runs. What you really need is more people and a stronger demand curve that's moving up to meet that supply curve, especially for fixed coin supplies, so your proof of work type stuff. You get those two together, that's when you get a $100,000 Bitcoin. That's when you get a $10 trillion market cap. Will that happen in the next year? I don't know. Will it happen in 5 years? I think so. But that's the way to look at it. Those two pieces. It's not just about people. It's about people that actually use the tokens for something other than just speculating. Just buying altcoins. You got to use this stuff. You got to, and not only use it, it's got to solve a real problem so that you keep using it and keep buying it, keep wanting it. All right. All right, let's see here. Can you talk about, Alejandro asks, can you talk about security tokens and what kind of strategy you are looking into implementing? Sure. So security tokens are a pretty new idea. I think Polymath is probably the first traded coin. At least it was traded a couple of days ago. I own some Polymath, full disclosure. But there's some other ones like Templum is one, Polymath is one, and then there's a couple more that are coming out that are they're still in beta. You know, they're like private equity sale round type stuff. But essentially, if you don't know what this means, right now we have ERC20 tokens, which are essentially utility tokens for protocol, or not protocols. They live on protocols so that you can get a token, mostly for Ethereum, and you can create a market that provides utility. Your app does something that people really like to use, kind of like what I was just talking about. And that is mostly what the market is right now. Now the question is, from a regulatory standpoint, are those tokens, utility tokens, actually considered securities? And securities is kind of a made-up thing that regulators use to be able to qualify whether or not, like why people are buying something. Mostly it just comes down to tax purposes. But that's one of the questions. So this thing called security tokens, which is a new protocol, or not protocol layer, it's a, what do you call it? It's like a token wrapper. I should guess you could call it. It's ST20, right? So security token 20. And what that does is it's pre-built to say these are going to be securities, but you can go to almost any asset and you can apply the ST20 token to that asset, create it as a security, tokenize it, and then put a market on it as though it's already registered as a security. So that bypasses so much ambiguity. It allows for a lot more money to come in. It allows you to tokenize virtually anything that has value and put it under the umbrella of it being a security from the first step. The thesis, or the idea, is that market, when you look at the global securities market, I mean, you're talking, like hundreds of trillions of dollars. I mean, it's as big as it gets. And so if you have a protocol that can tokenize those things like real estate, precious metals, commodities, anything that's currently a security, the utility tokens act more like companies, almost like equities, and the security tokens act like everything else, which is 500x bigger than that market. So I think it's really early. I think, we still there's a lot of ambiguity from the regulatory side, but if that works out, if security tokens do end up being what they claim that they can pull off, it's gonna be huge. And I don't know what's gonna happen, to be perfectly honest, but I'm definitely interested in making sure that I own a little bit, because if it does work, it's gonna be ridiculous. I mean, it's gonna be huge. So yeah, that's why I bought Polymath. Okay, here. Is ST20 already regulated? So ST20 isn't actually the it's like ERC20. It's just the type of token. So Polymath is the protocol that's built on it there. I mean, they use the ST20 protocol. So what's regulated would be the thing that gets tokenized. So if the cotton industry, or someone who owns $900 million in cotton, if they wanted to tokenize that stuff, it would be securitized, yes, but it's all about the asset. It's not about the token itself. To use the token, you need securitized assets. So it's not about the exact token yet. It's just about what gets tokenized. Because remember, that token, like so Polymath token or Templum token, when it comes out, that's no one knows. Like if you buy and sell that token purely for speculative purposes to make money, it can definitely be considered a security. But if that token actually doesn't add the value, it just facilitates a security protocol, that token may not be a security. And I know this is just my opinion. I mean, lawyers would know better than I would, but that is the gray area. Every token itself really just has to pass the Howey test, and no one's got a black and white thing for that. It just the good piece is that in 2 years, as securities come into this space, there is an onboard ramp for them. All right. Ricky, thanks for watching. All right, let's see here. Let's see if there's any news. I know Cointelegraph is not a very legit news, but I do think it's a good pulse on what people are reading. It's a pulse on what the headlines are, and as long as we're in a speculative market, headlines are what's going to drive price. So, which is funny because so much of this is related to price. I think that the more news you can read that doesn't have to do with price, the more well-informed you're going to be. It doesn't cloud judgment. That's my opinion, at least. Zcash to hit over 62,000 by 2025. That's interesting. Not sure I'm totally agree with that, but maybe they know something I don't. Let's see here. Mike, what are your thoughts on Naval's tweet? The more widely distributed cryptocurrencies are, the greater the chance they survive a showdown with governments. Look up the upcoming wave of fair coins. I think that's entirely true. I think that we need to hit. I think that in many ways, this, it wore a wolf's costume of, no pun intended, of get rich quick, to get people in here, to get the momentum, to get the juice rolling. And now we've gotten the attention of the regulators. We're seeing people sell off because they're scared or losing faith in crypto or whatever. The question is, does the momentum of this new thing have enough to survive no matter what? Meaning, if governments came out, which they're already starting to do, and say, we're going to regulate it, and then to the next level, like, oh, this is too much, we're making it all legal, this is whatever. The more they, laws are only as much as you can enforce it. Now, of course, I'm not recommending anyone do anything illegal here, but the bigger the network is that is decentralized, the more it's like, hey, if you're going to shut this down, you got to shut down the internet, which has been done. But, globally, that's what makes this interesting, is that this can live everywhere. So I do think, one of the core tenets of why I do this stuff, these videos, is for that reason, is to spread not only the message of crypto, but to get people all over the world to be a part of it. The bigger the network, both numbers-wise and geographically, the better. The more people we have using crypto in all countries around the world, buying, owning, hosting, running nodes, whatever, mining, that is a very important piece of the puzzle. Second piece, from Faircoins, it's kind of, it's similar to, it's just like doing huge airdrops to kind of everybody. And so instead of there being a market or a pre-sale or an ICO or a pre-mine or even mining to begin with, the coin itself is just immediately airdropped to, let's say, 1 billion people or 2 billion people, so that everybody has it, and then the market can go from there. And I think that gets into just market dynamics, and that gets almost into the political level, right? Of what are the pros and cons of the free market, especially on a global scale with socioeconomic implications. And I think that some people would think that that's a good idea. Some people would think it's a bad idea, but I do think that it's an interesting idea, and that one should be explored as we build out these new sets of wealth. Right? Again, that's what this is all about. It's like a whole new way of measuring wealth. And how do you create new wealth environments? So, all right. Am I crazy for being bullish on Stellar Lumens while at the same time disliking Ripple? No, not at all. I think that they're obviously, Jed, same founder, but there's a reason why he left Ripple. And I think that Ripple is a very, very different business than Stellar. From a corporate level, Ripple is a corporate entity and Stellar is a nonprofit. Like on the books, 501c3. You can look it up. So that's one piece. Like, they have very different business models, purely from a corporate standpoint. From the tech standpoint, there's also different levels of decentralization or centralization. Ripple is much more centralized, and Stellar is not as decentralized as something like, say, Bitcoin, especially with Lightning Network on it. But it does have some decentralized levels, right? You got to do, it's proof of consensus. And when you partner with somebody, they create the staking mechanism that you got to process all the nodes. There's just ways to decentralize the protocol that's different than Ripple. And the tech can go on from there. So I think that there's a lot of different parts to it, and they're also pretty diametric in their core vision. I think that Ripple's vision is to empower banks, and I think that Stellar's vision is to empower people in third world countries, especially low bandwidth people with low bandwidth to be able to use crypto. But you can use kind of start at the same center and just go two different directions. So it's a good question, but I think you can certainly be bullish on Stellar and not like Ripple. Like I'm super bullish on Stellar Lumens. I love Stellar. Own a lot of it. Huge fan. All right. Let's see here. All right, cool. What other questions you guys got? Pop them in there. Ravit, thanks for watching. I appreciate that. Steve the Bull, what's up? How you doing? All right, let's see. KPS, what do you think about salt? I think salt's an interesting idea. I think that debt and lending is a super interesting use case and business of crypto, but I don't know if it's going to end up being a profitable one. I think that the idea of, I've talked about this before, so I won't get into it too much, but I think that the idea of peer-to-peer lending has proven to be a very, very difficult business. If you want proof of that, go look up Lending Club and Prosper. Go look at their corporate earnings, go look at their previous PR problems, and look at how much of an issue they're having with lending, even in one of the biggest bull runs ever. I think it might even be the biggest bull run ever from a growth standpoint. So the idea of lending is very difficult without credit. And I personally need to dig into Salt's model a little bit more to understand what their long-term roadmap is as it relates to credit. So, I won't pretend like I'm an expert on that, but realize that the big winners in crypto are going to absorb wealth from other parts of the economy. Money is going to flow into crypto, and it's going to stay in crypto, and it's going to proliferate itself out. Debt is the biggest asset of the United States. I mean, probably of many countries, but definitely the United States. Like things like student debt, car loans, foreign debt, sovereign debt. I mean, there's a million types of debt that all sit on the balance sheet of the United States. And then you get all the way down into things like credit card debt or, all the things that people are in debt for. When you look at lending, things like Salt lending, they've created a much more unique mechanism. My question is, have they solved the problem of people being in debt, of overspending, of not being able to get, that's the real issue. I do not know if that is possible to stop, right, without a massive institutional change, which I'm not convinced is going to happen anytime soon, right? Like how capitalism works, growth, that whole thing. So when you look at Salt, there's two ways to look at it. One is you look at the short term, you look at the micro. That comes down to the demand, looks at people, almost the greater fool theory. Do people believe in it? Do they believe the story of lending? And if so, how long will they believe it? I think that just like everything else in crypto, it's probably got a very good chance of going up in the next year. Long term, when you look at the macro side of lending, I think it's going to be a problem unless they can figure out the credit side of it all. I think that's where the real money is, and the lending just becomes a debt instrument. And if you don't know much about debt and credit and debt, Ray Dalio has an awesome video on YouTube, and you should go look it up. Just Google Ray Dalio debt credit cycles. It's called How the Economic Machine Works. It's a 30-minute video. Really interesting if you're interested in this kind of stuff, and you'll learn a lot about how the macro economy works, especially, how all this kind of ties together all the way down to the individual level. How do I feel about the B token ICO? I think it's really unfortunate. I think it's also a good. So first of all, I think it sucks for all the people that were involved and anyone who lost money. That really sucks. At the same time, I think that this is the Wild West, and I want people to succeed. There's no question about it, and I want to educate people so that they do succeed. But if you're getting an email that says, hey, we raised our minimum from zero point 0.1 Ether to 104 Ether, and we're going to give you a 100% bonus, and we're going to guarantee that you're going to double your money. That's what the email said from the people that hacked them. And you still send money into that Ethereum address. Look, I'm a sympathetic person when it comes to, getting started into new things, but at the same time, I'm also like, oh, come on. You gotta keep it real. So as much as I think that it's a terrible thing that happened, and I think that the B team, I don't know them personally, I'm sure that they are trying to do the best they can, and it's wrong that what happened to them. But at the same time, guys, the responsibility and the benefit belongs to each of us, belongs to the individuals, and you gotta make sure that you know what you're doing, and you trust the people that you're sending money to, and set up the parameters so that you can verify that trust. And if it seems sketchy, you got to look into it yourself, because you are your own bank. Like, nobody's going to come in and there's no customer support and say, oh, I'm sorry, here's your money. Like, no, it doesn't work that way. So if you want the benefits, if you want to be able to get 1,000% returns, you also gotta be able to educate yourself so that you can be smart about it. I'm not trying to be a jerk or whatever, but that's the truth. That's what I think. All right, let's see here. Vivian, thanks for watching. Jordan, thoughts on Zuckerberg posting his goal for 2018 is understanding crypto. Soon after Facebook banning crypto ads, Facebook to create their own coin. I don't think Facebook is going to create their own coin anytime soon. I think that would be So first of all, I think the first thing you want to do is, like, one thing I always try to do, like I say, outsource myself. So assuming I didn't know anything about anything, I look at this as a science experiment. What would I do? What's a scientific method that I would get an answer to that question? And the boiled down would be, I would look at other social networks that have already released a token, and I would see if it's working. Specifically, I would look at KIN, which is the Kik ICO or Kik token. Excuse me. I would look at YouNow, which is kind of a social network, but they did an ICO with props, and that'll go live in a couple of weeks, I believe. I don't own either of these. I'm just saying these are networks. Maybe something like Steam, but they already built their network on top of a token, so people already knew it. So I think you want to look at networks that were established that are layering tokens in, because I think it might be hard to educate a lot of people on what that means. What owning a token, especially a utility token, what that really means. Because it sure couldn't be a security token, so you'd have to have it so that people weren't hoarding it to make money. So I don't know if you would even list it on the market or what you would do, make the protocol layer or whatever. To me, it just seems like a very, very, very large undertaking that is way too immature. So for Facebook to create Facebook coin, I do not see that happening anytime soon. Now, could Facebook integrate a currency into their platform the way that they integrate something like PayPal or a Venmo or, like proven transaction mechanisms, and offer that as an option to people that know what they're doing already? Yeah. And they create Facebook Wallet. You can use Facebook Wallet to house your currencies, and then they slowly allow those currencies to integrate into their ecosystem. That could happen. And then they roll in Facebook coin, and they kind of treat it like Binance coin or any of these exchange coins where they give you a huge discount for using it. But when you look at the big blockchain level stuff, I don't see that happening anytime soon. But it is interesting from a currency standpoint, right? As opposed to an architecture standpoint. All right, let's see here. Carter, you don't do super chat. I don't. I was going to do it, but you got to like enable monetization, and I want to make sure that my ads don't. I don't run ads, I think you guys, whatever. It's not really my thing, and so I just want to make sure that it doesn't like turn on ads on all my videos or anything. But next time. But I think if you do want to do a $2, $5 tip, share the videos, right? Share my channel on Facebook or Twitter. I just want to get more people on these things. Yeah, I think that's really the best way to do a tip if you guys are interested. Joseph, thanks for listening. Appreciate that. All right, let's see here. Terry asks, since you're a marketer, what do you think of tokens regarding digital ads, online marketing like display retargeting and affiliate? Won't they make digital advertising way easier? Potentially. I think that the bigger, so there's two huge pieces to the advertising business as it relates to tokenization. I shouldn't say that. There's a lot of pieces, but the two that I think are really interesting are, one, attribution, and two, the merchant processing stuff. And I'll focus on the merchant processing because that's the real pain point for anybody who does advertising or whatever. Meaning, if you're running ads and you make a certain amount of money or whatever, you still need to get paid out by the company that is the publisher. I mean, or the middleman, whether it be Google or Facebook, or maybe not Facebook, Google or like Outbrain or Taboola or all these companies. And they have a lot of authority to say, hey, you're not compliant. They also do like a 60-day payout sometimes. I mean, there's a huge business on the invoicing and the long-term payouts of any of those merchant processors. There's also a massive amount of risk that if they shut you down, your whole business goes down, both on the publisher and the advertiser side. So I think that's the big pain point that a lot of these tokens can solve, is bypassing that. And I think that's true in a lot of subsectors of the advertising industry that run into a lot of those payment processor problems, merchant processors. So I think that's the first use case. I think the second, with attribution, that's the size of a network type of deal, right? Because right now it's like you have all these individual pixels, whether like Facebook, Google, Outbrain. I mean, all of these, which essentially do retargeting pixels. And then you have secondary businesses like AdRoll and the million of other ones that are kind of like their own proprietary retargeting, where they're trying to solve that same problem. And I think that's what the other piece that the token could do, where if you have a winning singular ad platform token that becomes ubiquitous across almost all sites, networks, everything, and it becomes like what Facebook Pixel has become, then that gets really interesting, because you could just use one token, get access to infinite amounts of real estate on both advertiser and publisher side, and you don't have to worry about the payment processing. You don't have to worry about the merchants. So I think that's really interesting. And then you can get into like the actual exchange, the algorithmic side. But most of that, I mean, the blockchain can help with the exchange side of it, but on the algorithm side, that's less about the token. That's just about the core dev, right? The AI that they're running to do the best matching. All right, let's see here. What do we got? Let's see, Brett. Thanks for watching, Brett. What is my stance on IOTA and EOS? Do you think they're overhyped alts? I don't know. I do know that there's a lot of people that have shown some pretty serious indictments on IOTA's tech. I do not know about the tech enough to be able to speak to that personally, because I'm not a developer. But I do know that people whose opinions I respect have issues with IOTA's tech, and they seemingly don't really want to directly respond to the technical side. They want to respond to the person itself. Usually, that's an ego issue. I don't like to see ego issues in developers personally, or in anyone in business, to be perfectly honest. So I think that's a problem, right? Just like that piece of it. And with IOTA, I think it's just, I always ask questions like, if you took price out of it, what's still attractive, right? If you take these charts, if you take this price action, if you take the chance that you could make 20x on any of these coins, I'm not saying you could, if you could, what do you still have? And I think EOS actually does have an interesting business model, because it's kind of like Ethereum in that sense, where it's a protocol, and the tech, when it gets released to the market, essentially the promise is going to be way faster, more secure, right? Kind of blockchain 2.0 or 3.0 or whatever number we're on, I don't even know. But what's also interesting is, as a protocol, they are bringing in applications to build on top of EOS in order to power that protocol layer, same way Ethereum did that. And I don't know if IOTA is doing that, right? I mean, maybe they are, but there's definitely not as much as EOS is. EOS is really running itself like a business, right? Like, they have the whole DNA, which is essentially an investment arm that pulls companies and gets their apps to build on EOS. Neo does the same thing, where they're strengthening the network through that like business model. So tech aside, price aside, EOS, in my opinion, has a actual business model the same way Neo does. There's just a little bit more there's more unknowns, because the product is still kind of, it's still a brand for the most part, and the valuation is still insane. But they do have a business model. IOTA, it's, the promise is that it's a really interesting idea with really fast tech, but I don't see the business side of IOTA nearly as much as I see it for EOS. And some people are going to have different opinions on that, but that's my personal thought. So then when you bring price back into it, it just comes down to the network, right? Like, what's going to have the most stuff built on top of it, which is another way of saying, what's the network that people are going to use the most in 5 years, or even in a year, in 6 months? That's how you're going to get the 100x returns. And if maybe it's EOS, maybe it's IOTA, I don't know, but that's where I'm coming from. That's why tech is so important, even though I'm not a tech guy. Or I should say, I don't develop stuff. I focus on the products and the tech, because that's what's going to end up being the big winner. All right. What do I think about Xcz Masternodes? I think that Masternodes in general, if you believe in the company and you believe that they're going to be around for a long time, because you're going to have to lock up a lot of tokens, which, I mean, you can get them out, but in times like this, when the price is going down, if you own Masternodes and you see those regular deposits into your wallet, even as things are dropping like crazy, it is a very good, it gives you a lot of peace of mind. It's a good feeling, I will say that. So from a psychological standpoint, that's great. From a price standpoint, which is really what people care about, right? Because it's like you get the cash flow, but you also get the potential upside on the price. That's to be determined, right? If the Dash model can be replicated. Pivx kind of did it, but they stalled, and they kind of did it again. They're trying to do it. I think Zcoin is like the next in line to try to make the big push for that, to be able to make it work. But again, I mean, it all comes down to, are people going to use the coin for anything? Mellow Void with the strong Bitcoin shill. Peace. All right, let's see here. All right, guys. It looks like we're getting into the part of the chat where everybody starts just asking me thoughts on coins, which, if you want thoughts on coins, I would encourage you to go Google it, do your own research. So I'll take one or two more questions that, if you guys have them, we'll wrap it up. We're watching the price kind of make its way back down. If nothing else, guys, watch this 7,500 level, or I guess 7,550 on GDAX. for the double bottom. You're going to see a lot of support at that. And if it bounces, terrific. If it doesn't, guess what's next? All right, let's see. Thoughts on silver as a commodity. Not a huge fan. How do you stay balanced in bear markets? Portfolio sizing. Don't have too much money in the market. You won't freak out. What stops you from investing in ICOs? I typically only invest in ICOs that I know have. So I can do, like, in business and in life, I think that it's really important to spend time becoming really good at a few things. And it is not necessarily a good thing to be really good at or okay at a lot of stuff, at least as it relates to things like making money or gaining progress. My ability to go from complete scratch and sit in an office and go to ICO drops and pick an ICO and make a list and do all the research myself, that is not my specialty. Okay, that's not my thing. This is more my thing, being more of a community builder and content and thoughts and stuff like that. What I do is I build connections with people that do love doing all the research and getting really good deals on the ICOs. And the unfortunate fact is that not everyone can get those deals. That's just how the market works. But that's also a competitive advantage of being able to have 100,000 subscribers on YouTube. I can get those deals. And honestly, anybody, if you build something valuable, you can get an introduction for anything, right? It just takes a little time and effort. But I partner with people. I find people that are doing really good research, that are getting really good deals, and I work with them to get access to ICOs, and I let them do all the vetting because that's not what I'm really good at. And then I can provide capital. Potentially, I can provide some exposure on my channel, Twitter, whatever. But that's just the truth, because it doesn't make sense for me to try to become some ICO research guru when it's not my thing. Right? It's much better for me to just go to 1 million subscribers than to try to learn that whole thing too. Cool. All right, guys. Well, if you've got some value out of this, make sure you hit the thumbs up, subscribe if you haven't, share this with somebody, share the channel, youtube.com/coin mastery. Share it with someone on Facebook, on Twitter, tell them to go subscribe. And, I'm going to peace out. I'll see you guys on Monday, back in action, and we'll get back to the videos and podcasts. So thanks everyone for joining me today. As always, it's terrific, and I will see you later. All right, peace out.